Katjimune said the SME sector accounts for 90% of enterprises worldwide, employing 50% of the global workforce and contributing 40% to the gross domestic product in emerging markets.
More than 70,000 micro, small and medium enterprises are currently registered in Namibia in various industries, according to a report by the International Finance Corporation. The sector contributes around 12% to the GDP and employs 200,000 people, according to the Namibia Statistics Agency. Therefore, it is undeniable that the SME sector plays a crucial role in our economy. However, research informs us that more than 50% of SMEs worldwide collapse during the first 5 years of commencing operation, and this has been worsened due to the adverse effects of the 2019 novel coronavirus and other geopolitical headwinds, such as the war between Russia and Ukraine, which has led to an upsurge in global commodity prices, coupled with other economic and geopolitical factors.
Katjimune expressed concern over the low success rate of Namibian SMEs, estimating that around 70% fail shortly after commencement. He linked this alarming statistic to the lack of financing and access to capital, especially following the collapse of the SME Bank in 2017.
The Institute for Public Policy Research correctly notes that while commercial banks, the Development Bank of Namibia, the Ministry of Finance, the Bank of Namibia and other banking institutions have attempted to fill the gap left by the SME Bank, capital interventions are still not enough to offer the caution needed by SMEs to survive in tough economic headwinds. The funding of SMEs in Namibia can be categorized into two broad categories: the capital offered by commercial banks and that which is provided by government. SMEs which record an annual revenue between $0 to 10 million Namibian dollars qualify for capital funding from Bank Windhoek, Standard Bank and the First National Bank FNB, while those which generate between $0 to 5 million Namibian dollars can also qualify for funding with Nedbank Namibia. These banking institutions offer various financial products to SMEs, such as the Business Recovery Credit Plan, the Business Current Account with Overdraft, Vehicle and Asset Financing, Contract and Tender Financing, and Expansive Loans, just to mention a few. However, it is common cause that very few SMEs actually benefit from these funding schemes by banking institutions, with a high demand for collateral, a stumbling block for many.
Contributing to the motion, PDM leader McHenry Venani raised concern about the private and banking sector's reluctance to take initiatives in supporting SMEs, highlighting their stringent collateral requirements.
The private sector, and more so the banking sector, have this tendency of trying to take limited risk. Banks would say, if you want to start a company, you want to borrow us 20,000, bring a collateral of 20,000. Even if you know that, if a person say, this project is bankable, the bank would say, yes, your ideas are good, but bring your mother's house for you to get a collateral, to get a loan. And if you look at the risk, and it's a matter that needs to be discussed, perhaps during the budget debate, if you look at the risk versus the profit margins that our banks in this country are making, it tells you that very few of them are really walking the walk or the talk of financing small and medium enterprises. If you look at the profit, even if it is a drought year, even if the economy is not growing, every bank is pocketing billions of dollars in profits. They are not even ashamed to say, Standard Bank has made this, it's my bank. The other one has made this, the other one, no risk. If you look at the exposure of profit margins of banks in Southern Africa, comparing to banks in Eurasia, Indochina, Europe, and America, you would realize that banks in Southern Africa are more profitable than banks in larger economies. If you buy a house, pay it for 30 years. You pay that house threefold the value of that property. When it comes to the business sector, finance, 100%. Of course, we should also blame ourselves that we We collapsed the SME bank that was supposed to help the SME sector. The people that were ending up loaning money from the SME bank were multinationals. Yes. Big companies were the ones borrowing money from a bank that was meant to help SME startups. Secondly, we do not have what we call youth venture capital. And this is the thrust of my contribution. But you must have a youth venture capital.
Acknowledging the importance of addressing SME support, Prime Minister Sarah Kugongelwa-Amadila disclosed that Cabinet has given the green light for additional measures aimed at empowering SMEs.
I thought it important for me to say something on this motion that is moved by the Honorable Katjimune. And I want to say something because the issue of strengthening our support to SMEs has been one that has been on the desk of the executive for quite some time. We have started implementing a number of measures in order to realize what the Honourable Member is calling for. And as recently as today, we approved additional measures at Cabinet that are to be announced by the Ministry of Information, Broadcasting, not Broadcasting, MICT. They will announce it, and the part of them would be announced in the budget statement. This is the memorandum. I just want to cite some of the things that were approved by Cabinet today, because MICT will not lie, because you will see them tomorrow. They will announce Cabinet decided today Thursday. So they announced on Thursdays. So they are going to announce that last Tuesday, the 27th of February, Cabinet decided as follows. And that would include some of the things that I'm going to mention here. Because it's a document, I'm just citing from it to respond to most of the issues that we have raised.
Serafiana Dunya, NBC News, Parliament.